So investing with variable income has a few pitfalls. One is a lot of times people, variable income, you have the good months, you have the bad months, or down months, or lesser months. So I think the key here is a lot of times people will invest that money in the stock market, and then what happens is they have a down month, but then the stock market might be down, so they end up selling the stock to cover maybe some monthly bills or something like that. And you really can't start investing that way. To be successful, you need to establish a good reserve fund. So it's kind of like being a business owner, in that we have to have reserves in case we have a down quarter or down year even. So in your personal budgeting, what you would do is figure out how much your income varies by. So you know what your monthly income need is. You know how often you're making more than that, and then some months you have less. So I would say carry about 6 months worth of your expenses that are your potential shortfall that would be in a savings account. And so if you have a bad month, you would then pull from that reserve. Anything over that number, so let's say it's $50,000, you're going to keep $50,000 in reserve. Anything that goes over after a paycheck on a month or bi-weekly paycheck could then go into an investment account after that. So what you don't want to do is end up in a situation where you don't have enough cash, you have money in stocks, but then you're having to sell stocks when they're low to cover your monthly needs. So it's really simple. It sounds common sense, right? But we don't always see that with people. They think that, okay, I have the extra money, I want to go invest that. You have to have a rock solid foundation to build on. And so that foundation needs to have proper cash reserves. Hope this helps in your budgeting.